What if the real danger in the market is not the headlines you see every day, but a massive hidden bubble that is slowly reaching its breaking point? Most investors are distracted by news like war, tariffs, or short-term price moves. But the real story is much deeper, and if you understand it early, it can completely change how you see gold and silver. Welcome to Gold Silver Scope, where we break down complex market realities into simple and powerful insights. Right now, many people are confused about silver. Some bought at very high prices and are now facing losses, while others who entered earlier are still calm and confident. This difference is not luck. It's about timing and understanding the trend. Over the past cycle, there were clear entry levels where silver showed strong technical strength. Those who entered at those levels are still sitting comfortably inside the trend, even after recent volatility. But those who rushed in at extreme highs are now feeling the pressure. This is how markets work. Late buyers often get caught in corrections, while early investors can absorb the ups and downs. The key lesson here is simple. Markets reward patience and discipline, not emotions. Now let's go deeper into what's really driving this entire situation. It's not war. It's not tariffs. These are just surface-level triggers. The real driver is a massive financial bubble built over many years. This bubble is not small. It exists across major global markets, including stocks and debt systems. For more than a decade, the world has been operating on extremely cheap money. Interest rates were near zero for a long time. This made borrowing very easy. Governments borrowed more, companies borrowed more, and even individuals took on more debt. Everything was built on the idea that money would stay cheap forever. But that assumption is a problem. When money is priced too cheaply for too long, it creates distortions. People make decisions they normally wouldn't make. Investments are made that don't make sense in a normal environment. Over time, these small mistakes turn into a massive system-wide imbalance. Even today, interest rates are still low compared to historical standards. So the system is still carrying the weight of those past decisions. This is why the current market looks strong on the surface, but underneath, it is fragile. And here is where gold and silver come in. Unlike paper money, they cannot be printed. They are not controlled by central banks. They represent real value. This is why smart investors move into gold early, before the crowd realizes what's happening. We are now in a phase where the market is not crashing suddenly, but slowly forming a top. This is a very confusing phase. Prices go up, then down, then up again. It creates doubt in investors' minds. Many people think the market is still strong, while others feel something is wrong. History shows that major market tops don't happen in a single moment. They take time. The process can last months or even a year. During this time, investors get mixed signals and often make wrong decisions. And while all this confusion is happening, money quietly starts shifting. It begins to move away from risky assets and towards safe ones. And historically, one of the biggest destinations for that money is gold. As the market moves through this confusing phase, one of the biggest mistakes investors make is reacting to headlines instead of understanding the deeper trend. For example, many people believe that war automatically pushes gold higher, but in reality, the opposite often happens, at least in the short term. When a crisis begins, large financial systems usually rush toward liquidity. That means they move into the US dollar and government bonds. This creates temporary pressure on gold and silver prices. So instead of rising, metals may actually fall during the early stages of a crisis. This is exactly what creates confusion. Investors expect one thing, but the market does something else. Those who react emotionally often get shaken out. But those who understand the cycle remain calm. Recently, we saw a sharp correction in gold and silver. It happened quickly, almost like a sudden shock. But after that drop, something very interesting happened. Instead of continuing downward, the market started moving sideways. Prices became volatile, but they stayed within a range. This kind of sideways movement is not weakness. It is consolidation. It is the market stabilizing after a strong move. It also serves another purpose. It removes weak hands from the market. Investors who expected quick profits lose patience and exit. This clears the way for stronger hands to take control. There was also a key moment where prices briefly dropped below an important support level. Many investors saw that level and placed their exit points just below it. When the price dipped, it triggered those exits. But then, almost immediately, the market reversed and moved back up. This is known as a fake-out. It is a classic move where the market shakes out remaining sellers before moving higher. It creates maximum confusion and forces emotional decisions. Now, if we look at the bigger picture, the long-term trend for gold and silver has not changed. Even during this correction, the overall direction remains positive. What is changing now is the short-term momentum. It is starting to align again with the long-term trend. This means the market may be preparing for another upward move. And this next move could be stronger than the last one, because once momentum builds again, it often accelerates faster than expected. Another important signal is coming from the financial system itself. We are starting to see weakness in areas that usually lead major market changes. For example, parts of the banking sector are not performing as strongly as the overall market. At the same time, there are growing concerns in the bond market. Rising yields and falling bond prices suggest that confidence in government debt is weakening. This is a serious issue because the entire financial system is built on trust in these instruments. When that trust starts to crack, it creates a powerful shift. Investors begin to look for alternatives. And historically, gold becomes one of the primary choices. So while the surface-level news may keep changing, the deeper signals are becoming clearer. The system is under pressure, and that pressure is slowly building toward a larger move. As we look ahead, the most important thing to understand is that we are not in a normal market environment. The system is dealing with the consequences of many years of artificial conditions, and these conditions cannot continue forever without adjustments. The stock market, for example, is likely going through a topping process. This does not mean an immediate crash. Instead, it means a long period of uncertainty, where prices move in confusing patterns. This phase can last months and test the patience of investors. During this time, many people expect a sudden collapse, but history shows that major declines often happen gradually. Even large bear markets can unfold over years without a single dramatic crash. At the same time, gold behaves differently. It does not necessarily fall with stocks. In fact, during many past downturns, gold has moved in the opposite direction. This is because it represents a shift in trust, from paper assets to real assets. If the current trends continue, we could see a significant revaluation of gold over time. Historical cycles show that gold has made large multi-year moves in the past. And those moves happened under less extreme conditions than we have today. With growing pressure on currencies, rising debt levels, and weakening confidence in financial systems, the conditions for a major move are already in place. Silver, being more volatile, could move even more aggressively. But it is important to stay realistic. The journey will not be smooth. There will be corrections, delays, and moments of doubt. Those who expect instant results may get frustrated, but those who understand the long-term picture will see the opportunity. In the end, success in this market is not about chasing prices. It's about understanding cycles, staying patient, and positioning yourself ahead of major shifts. If you want clear, simple, and powerful analysis on gold and silver, make sure to follow Gold Silver Scope and stay ahead of the market.